Hi everybody and welcome to the first video in a multi-part series about basic accounting. So why should you watch this video? If you've taken accounting and you've had a hard time, you're about to take accounting, or you just want to go ahead and get some help and have this complement your current accounting course, this will be the one for you. Whether your professor is using this book, this book, this book, or even this book, which is trying to use sports to get you into accounting, or this book that I use in my accounting classes, it doesn't matter. The goal here is to take these concepts and make them simple and use a lot of visuals to get you through accounting, because not everyone is going to learn this the same way. As I've seen with my students, I try different visuals, different stories, different somewhat humorous anecdotes, depending on the audience. You decide if they're humorous or not. So how did accounting start? Well, accounting has been around since ancient Mesopotamia. And if you didn't know, and I may have looked it up a little bit too, Mesopotamia is where present day Iran, Iraq, part of Turkey, which by the way, as of a couple years ago, is not called Turkey anymore. It's called Turkiye. I guess that's closer to how you actually pronounce it in Turkish. Who knew? Fast forward many hundreds of years, and then Scotland worked on it for a bit, and then where really the person who is considered the father of accounting is this handsome fella over here. Luca is credited with being the father of accounting because he wrote this book over here, and that laid out what is the foundation of accounting that we'll get into in a later video and series, but that's dual entry accounting and rules that we use regardless of the size of your business. So what is accounting? Well, for many, it's a term that sounds scary and like it would be a difficult course. My opinion is that it could not be any further from the truth, and that there's very little math involved, and if done correctly and taught well, you'll realize that your Excel or Google Sheet does the math for you, and oftentimes you don't even need a calculator for the course. So if you are good at organizing things, especially visually, you could do very well in accounting. Essentially, accounting, which is known as the language of business, is the recording and record keeping of all business transactions and using it in a format that anyone can see the financial health of a company. There's different dictionary definitions that are perhaps more confusing, but that's the easiest and most concise way to put it. So who uses accounting? Accounting is great for investors, business owners, and managers, as well as the government. Business owners need to know the state of their business, what's making money, what's not. Managers want to know, well, what's most profitable on the sales floor? Maybe we could pivot and have a different revenue source and get more of that item, and the things that are losing money, let's cut those loose. If I'm an investor, I want to be able to look at a company, do some very simple research, look at a few figures, and have a general concept of whether the company is on an upward trend or not. There are 5 basic types of accounts. They are assets, liabilities, equity, revenue or income, and expenses. Next up, what is the universal accounting equation? Based on a professor's preference or whichever textbook they might be using, you're going to see variations. However, the more concise way to look at it is this: assets equal liabilities plus owner's equity, as you see here on the screen, often referred to as ALOE. If we think of it in terms of personal finance, you can say that instead of owner's equity, let's use the term net worth. And someone's net worth, or how much they financially have, what value they financially have, is derived at by taking everything that they own, which are their assets, such as their cash, their car, their home, and you subtract everything that they owe, which are their liabilities, such as a student loan, a car loan, and a mortgage. What's left? That is their net worth. Well, in accounting, we're going to call that their equity. Oftentimes, it can also be called capital. For now, we're just going to say that's the same thing. If the universal accounting equation of ALOE seems a little off, look at it this way. Take the liability and subtract it from both sides. Don't worry, I'm not going to give an algebra quiz after this. Remember, whatever you do to one side, you do to the other. So if we take liabilities off one side, and then we subtract it from the other one, well, it cancels out on one. And then instead of ALOE, now you have assets minus liabilities equals owner's equity. Now it looks more familiar. Now it looks like personal finance, where assets minus liabilities equals your net worth. So in that regard, this is the same. Much like if a person has $50,000 in assets and then they owe $30,000 in liability, their net worth is $20,000. Now, if it's a company and there's $50,000 in assets, it's a delivery van and cash for the business minus what they owe, maybe a loan on that van of $30,000. Well, now the owner's equity, or the capital that they would have a claim, a stake to the business, would be $20,000. Join me in the next episode when we talk about business transactions and the concept of dual entry accounting, brought about by this guy 500 years ago. If you like this video, please consider subscribing, and I'll see you next time. Good music.